Yes, Consumer Price Index, probably the most important inflation gauge for the month of August. Headline number up 0.3. That's a tenth lighter than expected. And the 0.5, of course, was one of those numbers that started to creep down with the high water mark was up 0.9. And if we strip out the all-important food and energy, it really moved back down from up 0.3 to only up 1/10. Up 1/10 is the lightest it's been since February. We started out the year at 0. Now let's go to the important year over year. Year over year, CPI up 5.3%, 5.3. That's 1/10 lighter than 5.4, and 5.4, our last look, was the highest year over year read since 2008. Finally, if you strip out food and energy, you're left with year over year read of up 4%. That follows up 4.3, and that followed up 4.5. That was a June number, and that was the highest in 30 years. So you can definitely see, Becky, that we've eased off, even on the year over year, which are still high. And I can actually honestly now use the word transient. What's transient is most likely the effects of the Delta variant that are keeping prices from accelerating faster, among supply chain issues potentially easing. The real question, of course, is when all the dust settles, whether it's 1, 2, 3 years down the road, is that apartment rent going to go back to where it was? Is the price of a car going to go back to where it was? Most don't think so. But the sticker shock of that, well, we'll have to wait and see the effects on the general population when all this passes us by. Back to you.
Hey, Rick, just watching the Dow futures jumping on this. They're now indicated up by about 120 points above fair value. I guess that's the market thinking, OK, we were kind of anticipating that the number would be at least up 0.4% and likely hotter based on the series of numbers that we've seen recently. Maybe this means there's less pressure on the Fed to move immediately.
You know, we could debate as to where the pressure is going to be on the Fed. My own feeling is that Jay Powell and company know full well that most likely the Delta variant effects are going to be on the downslide at this point in time. And I do think that they can continue to talk about what they're going to do and keep us all busy and kind of shift our focus from a more real time to a more down the road. But in the end, the Fed knows what they have to do, and the European Central Bank knew what it had to do, and it didn't, and the market response was rather swift, although their interest rates are stubbornly high, despite the fact that they want to keep the pedal to the metal on stimulus.
Rick, thank you very much. We're going to continue to watch this. Steve Leisman joins us with more on his reaction to these numbers. Steve, what do you think?
Becky, good morning. I think Rick has it right, and I think the Fed has had it half right. What's happened is some of the initial surge in prices that came with the reopening, airline fares and used cars, they've eased off quite a bit. When I look at the used car prices, they are down 1.5%. They had risen 32%, 10.5%, and then they started to fall. So that's declined. Airline fares down 0.1%. That was the initial surge. But here's the deal that we're still waiting for. Rick has it absolutely right that you might have some decline here in prices because of the COVID surge. What was expected to happen was a transition from price increases in the initial reopening to price increases in the services sector. You might have had a reprieve now in the service sector price increases because of the surge in Delta, which means it's yet to come. So Powell's right. We did have some transitory factors that were part of the surge in inflation, but we may get another wave on the backside of this, especially because what we're watching is shelter prices. Shelter prices up 0.2%. It's expected, given what's been happening with high prices in real estate, that those are going to surge in the months ahead. So I don't think we're out of the woods, and I think it takes maybe some of the pressure off the Fed to act this month, but I still think it's a possibility they do announce that taper, Becky.
Look, one of the things that's pretty interesting, and Rick pointed this out, if you're looking ex-food and energy, it was only up by 0.1%. That tells you that a lot of the inflation is coming in things like food prices and fuel prices, and we know that's the case, too. Kathy Wood spoke with Andrew yesterday, last night at the SALT conference, and she was talking not about inflation, about deflation. For that to be the case, she thinks technology is a big part of that. That's what she told Andrew, that technology will keep those prices down. Technology is probably not going to help with a lot of things like fuel and food.
No, those things are specifically almost immune in some cases to effects from technology. But you're right, Becky, and there is a whole series of other things, by the way, that the Fed is counting on that could keep inflation in check. you have a surge of input costs for businesses. What do? Well, they try to pass some along. That's the easy way to do things. They could also reduce their costs. And one of the ways they can do that, they can let people go. But they can also look for more productive aspects. And that's why the surge in inflation also, makes you want to spotlight, highlight, or think about some of these technology companies that provide a way for businesses to respond to higher prices without passing them along by increasing efficiencies. And it is one of the reasons, Becky, I believe we've seen some increase in productivity in the economy during the pandemic.